It is now time, and it might take a couple seconds to get the real important numbers, but Rick Santelli is going to do it for us. Hey, Rick.
Hi, Joe. Yes, of course, we're waiting the most important number of the month, November jobs report, expecting 200,000, 263,000. And, of course, until it's revised, 261,000 in the rearview mirror, pretty much a lateral move. Private payrolls, well, they moved to 221,000. And if you look at the combined revision of the last 2 months, we subtracted 23,000. Unemployment rate, 3.7, as expected, and it's in the rearview mirror. Don't see a revision as of this point. Okay, revision, 284,000 the last non-farm, so 263 is the new benchmark. Average hourly earnings on a month-over-month basis. All right, buckle up. This is a biggie. Up 0.6%, up 0.6. That equals the high water mark from October of 2021. So that is a strong number. And wages year over year, 5.1%. Now, keep in mind, the 4.7 last month was the lowest since August, okay? It's lowest since August of 21. This is a robust number at 5.1 and much better than expected. 5.2 was August, so it hasn't been that long. The high water mark here is 5.6 from March. But nonetheless, it is definitely stronger than expected. And if we look at the average hours worked, 34.4, let's see, 34.4 is about as expected. We've had 34.5, 1, 2, 3, 4, like 5 months in a row. So we have eased back just a bit, 1/10. And finally, the labor force participation rate moving in the wrong direction. This is not good. 62.1. 62.1. That equals the low mark, which was in July, also at 62.1 on a recent basis. If you go back into last year, we had 61.6, 61.4 actually in January of 2020. So when you look at it in the context of 2022, it's a big disappointment. And U6, the other unemployment rate, the 6.7%, and that equals the best, the lowest level that we've seen in U6, or the underemployment rate. So to summarize, I think the Treasury market says it best. Yields, well, yields went straight down, okay? Down, down, down. We're now at, excuse me, yields went up, equities went down. We popped up to 361, so, Joe, we're up almost a dozen basis points. The stock market, on the other hand, if you're looking at the Dow futures, they've pretty much dropped. So up rates, down stocks. This is pretty much the reverse of what we've seen. Cleveland Fed put out a paper that many were talking about that put a nice bid into the short end. Well, that bid is gone, as you see. Rates popping there, up almost a dozen basis points compared to their close last night. Back to the panel.